Hello students, I Devatanand Gupta going to take your accountancy class. This is part 3 video of basic accounting terms. Today in this video we are first going to discuss about the loss. Loss means the term convey two different meaning. It convey the result of the business operation which exceed total expenses over revenue. Suppose for example we can take, we purchase a goods at rupees 2 lakh and it sold at rupees 1,80,000. The difference between two is 20,000, that indicate loss. Or we can say that another way, that when we are purchasing the goods, or if revenue is rupees 2 lakh, and total expenses is rupees 2,40,000, the difference between the revenue and the expenses is 40,000, that is termed as loss. Okay. Now let us go to the another point. Another point is purchase. Purchase means it is usually mean for the purchase of goods in which business deals. In case of the manufacturing concern, goods means acquiring of raw material for the purpose of conversion of raw material into finished goods, semi-finished goods, and for the purpose of resale. Whatever we are going for the purpose of resale is termed as purchase. Now next one is purchase return, which is related with purchases. Why purchase return term came? Because sometime whenever we are purchasing the goods from the supplier, they by mistake they have given wrong order, or defective goods has been given to you, that goods is returned back to the supplier, that is termed as purchase return. Now let us go to the sales. Sales means transfer of ownership of goods or services to customer for a price. For example, Tarun sell computer to Barun. The ownership of computer transfer from Tarun to Barun, that is called sales. It is meant for resales. Whatever the businessman has purchased and it has been sold to other person for meant for sale, resale is termed as sale. Now with this next term will be related to the sales, that is sales return. Sales return means when we are purchasing goods from customer has purchased the goods from us, but due to the lack of knowledge, customer has get different product which he has not ordered, or defective goods has been supplied by the businessman. That defective goods will be returned to the business. That return will be termed as sales return. Now let us go to the next point, that is stock in trade. Stock or stock in trade, it refers the value of those goods which are purchased for reselling and which are lying at the end of the accounting period is called stock. Here the term accounting period came. There are accounting period means a period of 1st April to 31st March. There are two types of year. One is accounting year and one is calendar year. Accounting year starts from 1st April and ends on 31st March, and second calendar year starts from 1st January and ends on 31st December. Then next, stock is of two types, one opening stock and second closing stock. Let us discuss about the opening stock. Opening stock means that type of goods which is lying unsold at the beginning of the accounting period. Means whatever the goods which is lying to the businessman at the beginning of the year is known as opening stock. Now let us go to the next point, that is closing stock. Closing stock means value of the goods lying unsold at the end of the accounting period. One is at the beginning of the accounting period, then opening stock. At the end of the accounting period, then it is closing stock. Then let us go to the next point, that is trade receivable. Trade receivable means that it refers to the amount receivable on account of sale of goods and services rendered by the firm. It can be of two types, or it includes two things. One is debtors and one is bills receivable. Debtors means the customer who has buy the goods from us on credit. That customer is termed as debtors. Next one is the bills receivable. In bills of exchange, the person or who draw the bill is known as the drawer of the bill after the acceptance of the drawing. Now let us go to the next point, that is trade payable. Just like trade receivable include two terms, that is debtors and bills receivable, here also trade payable include two terms, that is creditors and bills payable. Trade payable means the amount payable on account of sale of goods or services rendered by the firm. Creditor means whenever we are buying goods on credit. Whenever we are buying goods on credit, the term creditor will come. When it is purchased on cash, no creditor terms will come. Then next one is the bills payable. In bills of exchange, becomes bills payable for the person who accept it, draw it and return it to the drawer. The bills payable is an accounting term for bills of exchange accepted in favor of the creditors. The amount is specified in such bill payable at a future date. Bills payable is with drawee of the bill. Drawee means acceptor of the bill. Now we are going to the next point, that is discount. Discount means it is a rebate or an allowance given by the seller to the buyer. Means discount is a rebate given by the seller to the buyer. It can be of two types. One is trade discount and one is cash discount. Trade discount, when discount is allowed by the seller to its customer at a fixed percentage on the list price, means on printed price, whenever we are getting a discount, that is called trade discount. Trade discount is usually given by the seller to the another seller for the purpose of earning profit. Next one is the cash discount. Cash discount is given to all, whether it is a seller or whether it is a customer who buy the goods for self consumption. When discount is allowed to the customer for making prompt payment, or suppose when we are buying the goods and we are paying a huge amount, suppose the bill amount became 2,10,160, then 1,160 was left by the seller, then that 160 is a discount for the customer. Now next point, we are going to discuss, that is GST. GST means goods service tax, which include all the taxes that emerging VAT, service tax, sale tax, excise duty. These all are emerged under the single tax known as GST. GST is always paid at the time of purchase, but it is collected at the time of sales. It is paid at the time of purchase and collected at the time of sales. Now, next term is goods. Goods means it includes all the things which are purchased for resale or which are used for the producing the finished goods, which are also meant for sold in the market. Thus, for a furniture dealer, purchase of furniture and table is termed as goods, while for other it is termed as furniture and is an asset. Means those who are purchasing furniture, suppose I am a seller of furniture, then if I am purchasing tables and chair, then it is goods for us because it is meant for resale. But if a businessman is purchasing that furniture, table and chair for the purpose of business, then it is termed as assets for the business. Now let us go to the another point, that is voucher. Voucher is simply a bill or documents or proof that the transaction has been done. For example, a voucher is a document which provides authorization to pay on the basis which the business transaction are first of all recorded in the books. Suppose I purchase a goods for rupees 25,000, then how I will show that the cost of that goods is 25,000? By showing the bill. That bill is known as voucher. There are different type of voucher which we will discuss later in the upcoming chapters. Now let us go to the other important term which is useful in business entity. First, it is entry. Entry means any transaction whichever is recorded in the books of account is termed as entry. Next one, bad debt. Bad debt. Bad debt means, suppose sometime there are so many, sometime when a seller is selling goods to the customer on credit, out of 100, there will be the chances that 10% of the customer will not pay your amount or return your amount. It means that your amount, by continuously you ask that person continuously that you pay your amount, but he is not paying. By continuously forcing by hook or crook also, then he is not paying. It means that your amount is bad debt. Next one is insolvent. Insolvent. In your previous classes like 9, 10 and all, insolvent, what does you mean? It means that which is not soluble in water is known as insolvent. But in accountancy, insolvent means the different things what you have studied in class 9 and 10 in science. Here insolvent means a person or enterprise who is not in a position to pay his debt is termed as insolvent. Okay, now we are going to the next point now, that is solvent. Solvent means the person who is in a position to pay his debt is known as solvent. Then next term, it is revenue. Revenue means an income of recurring nature, means again and again it will arise, that is termed as revenue. Then next point is revenue from operation. Revenue from operation means earned by the enterprises from the operating activities, from the selling of goods, and revenue from the sale of services. These all are included in the revenue from operation. Now next one is entity. Means business has created one entity, or simply we can say that it means an economic unit which is formed for earning profit or earning income by providing services or selling goods. For example, LG Electronics, Wipro, Maruti Suzuki, these all are related with the entity. Now next point, that is turnover. Turnover means sale of goods made during a particular period. Then last is investment. Investment means to deploy a fund in the shares or debenture of company with the intention of earning a return is termed as investment. This is all about the basic terms of accounting, where you learned different meaning which are used in the business world by the business enterprise to record the transaction. Thank you.